Hello, good evening, and welcome to Business Live. My name is Emmanuel Abuaji Riafe, and in this edition, Monetary Policy Committee of the Central Bank decides to reduce the policy rate marginally and cites favorable outlook for the economy among key drivers. Latest financial and economic data released by the Bank of Ghana puts the public debt at over 112 billion cedis as of September this year. And President of the Association of Bank Treasurers and Currency Dealers, ACI, Gati, is assuring businesses not to panic over the recent significant depreciation of the Ghana cedi, saying measures by the central bank will bring more dollar inflows to correct the situation. These are the headlines and plus other stories coming up on this evening's edition of Business Live. My name is Emmanuel Abuaji Riafe once again, and you can always stay interactive with us by tweeting at Joy Business GH is our handle, and on Facebook we are on Joy Business. We're taking a short break. The details coming up.
Business Live today is brought to you by GCB Bank.
Thanks for staying. Now, the Monetary Policy Committee of the Bank of Ghana has decided to reduce the policy rate marginally. The committee dropped the rate by 50 basis points to 25.5%. This is the first time since June 2011 that the bank has reduced its policy rate, which often influences cost of credit. Addressing journalists after a meeting to review the health of the economy, Governor Dr. Abdul Nasiru Ishahaku said the action was influenced by a favorable outlook for the economy.
The outlook for inflation is broadly positive, as reflected in the continued decline in the underlying inflation, stability in the foreign exchange market, low aggregate demand conditions, and general high real interest rates. Growth conditions remain weak and below trend. This is underpinned by weak global demand, declining commodity prices, and disruptions in the production of oil and gas. Other factors include weak private sector credit growth as a result of the tight credit stance and fiscal consolidation efforts. These tight conditions are expected to prevail in the outlook. With these considerations, ladies and gentlemen, the committee concluded that the downside risks to growth outweigh the risk to inflation, and therefore decided to reduce the policy rate by 50 basis points to 25.5%.
Meanwhile, economist Professor Peter Coty has been assessing the implications of the reduction in the policy rate on the economy and also for businesses. He spoke on the market, please.
I think it is, especially in an election year, given that we are in the last round of few days towards the elections. Normally, and also towards Christmas, you see a lot of demand for foreign exchange, you see a lot of economic activity, spending, and the rest. But so far, the inflation rate, the exchange rate movement have been quite stable, I must admit. So I think it's in line with this, that a reduction or in the policy rate is quite acceptable at this point. We have to be a bit cautious, though, because sometimes it is after the elections, perhaps the first quarter of 2017, that we see some of the numbers, the real numbers. But for now, I think compared to previous years, we've managed to contain inflation and exchange rate movements. Well, the bank rate, lending rate, etc., depends on several other factors, including the policy rate, the default rate, for instance, and many other factors, their cost of operation. So it depends on what proportion, how significant. This is quite marginal. So it's very unlikely that you see any major change coming from the banks. I think the default rate and other factors are quite significant.
Now, the public debt has reached a little over 112 billion cedis as of September this year. This was contained in the latest financial and economic data released by the Bank of Ghana, but there appears to be some discrepancies in the real margin of growth in the debt numbers. George Riafi tells us more.
The Bank of Ghana's report ending November shows that from July to September, the debt numbers have gone up by 6.2 billion cedis. However, when you look at the same Bank of Ghana's report released ending September, the growth over the past 2 months was 2.6 billion Ghana cedis. This is because the amount quoted by the Central Bank for the public debt in their previous report as of July was 109.8 billion Ghana cedis. However, when you look at the latest report, the bank says the debt as of July was 106.2 billion cedis. Attempts to get clarity from those who are responsible for the debt numbers have been difficult. However, a source close to the Bank of Ghana says their figures are based on numbers given to them from the Ministry of Finance, so they cannot be held responsible. But if you go with the November report, then the 112 billion cedis public debt accounts for about 67% of the total value of the economy. That is the debt-GDP ratio. For some, the current development could mean that Ghana is likely to meet the IMF's end-of-year target of debt-GDP ratio of 66%. This could influence the rating agencies to review Ghana's creditworthiness to a favorable position.
Now, President of the Association of Bank Treasurers and Currency Dealers, ACI, Amagati, has assured businesses not to panic over the recent significant depreciation of the Ghana cedi, saying measures by the central bank will bring more dollar inflows to correct the situation. In an interview with Joy Business, Amagati was optimistic the central bank's measures, including the directive for exporters to repatriate their profits into the country, as well as their other options, will help stabilize the cedi.
No need for panic. There isn't. Like I said, with the FX auctions coming up, we'll see more inflows. You know, also, Bank of Ghana made it such that all those exporters repatriate their proceeds back into the country. Initially, we didn't see so much of that, but I think that is starting to pick up. That should increase the inflows that are coming. If the supply starts improving, we'll see some stability on the market. There's no need to panic.
Explain to me how this whole auction thing that you're talking about is going to work out. You're going to start from the end of November. How is it going to work out? Which you believe that it would have an impact on the Ghana cedi?
Okay, so the central bank is going to make it such that banks will bid for FX from them. And they are using the Reuters platform in doing this. So if they come onto the market and they say, we have this amount on the market, and then all banks are to bid their price for it. So I think with that, we'll see more inflows coming into the market. If they have, you know, there were talks about the cocoa money coming straight to commercial banks. However, are the banks ready to take that amount of FX? No, I wouldn't say we are. If it goes to the central bank and is auctioned back into the market, I believe we'll have the necessary inflows we need to cater for the demand that we are seeing now. So that should be able to stabilize it.
It's on Business Live. Let's take a break here. We'll be back.
Business Live today was brought to you by GCB Bank.